a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about India ETFs. So we know that one of the biggest concerns for investors lately is China's economic slowdown. The world's second largest economy hasn't yet recovered fully from the impact of the strict pandemic-related lockdowns, and its real estate sector is in a crisis. So foreign investors are leaving China and Chinese stocks and ETFs, and one country that clearly benefits from China's economic crisis is India. So after the pandemic-driven supply chain disruptions, many American companies are trying to reduce their dependence on China, and India has a very large, highly skilled labor force, and the Indian government is very keen on attracting more foreign investors. Now, China's geopolitical tensions with the US and other Western countries have also encouraged large multinationals to look for alternatives to China. And the world's most valuable company, Apple, is reportedly planning to increase its India manufacturing to about 20% of its global iPhone production in the next 2 years. Now, the Indian government is trying to assume a leading role in global affairs because the West is trying to counter China's rising influence. So the country recently successfully hosted the G20 summit. And I should also note that India recently joined the elite club of countries that have reached the moon. And in fact, it is the first country to reach the moon's south pole. Now, it is the fastest growing major economy. And according to the IMF, the country will have a 6.1% GDP growth this year and 6.3% in 2024. It is poised to become the world's second largest economy by 2075. That is according to Goldman Sachs. Currently, it is world's fifth largest economy. And unlike many other countries which have either dictatorship or unstable democracies, India has political stability. Prime Minister Modi is in his 10th year of term now, and it is almost certain that he will win another 5-year term because the country has been doing quite well under his leadership, and the middle class has been rising. That is one of the biggest stories because it's the world's most populous country, and people are there. The middle class, their incomes are rising. They're spending more on better items. Digitization in the country is other phenomenal story. This is something which I have seen, but personally, the amazing growth of digitization and e-commerce in the country. But we should remember that in terms of infrastructure, India is still decades behind China. The Chinese government has spent a lot in the past few decades on their infrastructure, and a lot needs to be done in terms of deregulation and tax reforms as well in order to become a manufacturing hub. But the government has been spending a lot on infrastructure, building highways, roads, warehouses, digital infrastructure. And according to the IMF, capital spending and productivity growth will be biggest drivers of India's expansion in the years ahead. Now let's take a look at 4 India ETFs. So the first one that I'm highlighting, it is the most popular, the largest India ETF. It holds large and mid-sized companies in India. Market cap weighted and has an expense ratio of 64 basis points and 6.1 billion in assets. In order to learn more, let's go to the code page on Zacks.com. You can read our research report, recent articles, And using the link, you can go to the iShares webpage for this particular ETF. It's always important for investors to see what an ETF holds and the kind of weighting scheme. So 123 holdings. And if you look, you will see that Reliance Industries, which is a conglomerate operating in energy, retail, telecommunication, and whatnot. It is the largest holding with almost 9% weight. And then you see some banks, Infosys, which is a well-known technology company, that is also among the top holdings. Tata Consultancy is also one of the top IT company in India. Now, the second ETF that I'm highlighting follows a slightly different selection and weighting scheme. So it holds profitable Indian companies. Earnings. These holdings are selected and weighted by earnings. Slightly more expensive, 85 basis points, but it has delivered better performance over the longer term, which I will show you in a bit. Has 1.3 billion in assets, quite popular. And now these India ETFs have gathered a lot of inflows lately, particularly since China concerns started emerging and investors started leaving China and China-related ETFs. So let's go to the Wisdom Tree webpage using the link on Zacks.com code page. And Wisdom Tree has some good research on India, so it makes sense to learn more and read more about these companies and the economy. This is support diversified. It has more than 400 holdings, in fact. Tata Steel, Reliance Industries, and then ICICI Bank and Infosys. These are the top holdings, but you will see that it's not as top heavy because it is more diversified, more holdings and a different rating scheme. So a little less top heavy, but you will see those same familiar companies in this ETF as well. The third ETF I'm highlighting is again different from the other two because it holds smaller Indian companies, small cap Indian companies. 74 basis points expense ratio. It is smaller compared to the first two that we discussed, 450 million in assets. But if you want to bet on the Indian consumer, then this is worth a look. Again, let's go to the quote page on Zacks.com, and using the link, we can go to the external homepage. 74 basis points expense ratio, which I mentioned. So these are the top holdings. These are not very well-known companies. ZA Entertainment, yeah, I know that company. But if you look at the sector exposure, you get a lot of exposure to industrials, materials, financials companies, not only consumer discretionary, and information technology has a slightly lower weightage in the ETF. The fourth ETF that I'm highlighting is actually quite new, but I like it because it focuses on the growth of internet and e-commerce in India. So companies deriving more than 50% of their revenue from these activities. 86 basis points expense ratio, but just 9 million in assets so far. So this is a new ETF, a small ETF. Be careful if you want to buy this ETF. Use a limit order or watch for some time before buying. Now, again, let's go to the quote page on Zacks.com for this ETF. And if you go to INQQ webpage, the ticker symbol, as I mentioned, is INQQ for this particular ETF. So you will see very different holdings in this ETF. Zomato, which is a food delivery company and restaurant aggregator company, it went IPO recently. This is the top holding, 9% in this ETF. And then Bajaj Finance, which is non-banking financial company, that holds that accounts for another 7% of the portfolio. Reliance Industries, which I mentioned, is in almost all areas in India. It is the third largest holding. Info Edge is an internet company. So you get a very different kind of exposure in this ETF, but it is a small product currently. Now, on the next slide, I have the comparative performance for this year. So the small cap India ETF and the INQQ, the Internet and e-commerce ETF, they are both up about 23% year to date. The Wisdom Tree product, the earnings, which focuses on earnings, that's up about 15%. And the market cap weighted, the largest product, INDA, is up about 9%, whereas the S&P 500 index is up about 18% year to date. And China, the most popular China ETF, is down about 3%. Now, when you're investing in emerging markets, you should look at the longer term performance too, because you have to be patient. There may be a lot of volatility in between. Now, we know that US has outperformed every other country in the world. So almost, all the countries in the world. So if you look at the 5-year performance, the S&P 500 index is up about 67%. The India earnings weighted ETF, the Wisdom Tree product, and the small cap India ETF, both are up about 62%, pretty close to the S&P 500 index. And the market cap weighted index has returned about 33%. And during this time, over the last 5 years, the most popular China ETF is down almost 30%. Thanks for watching. Make sure to check out zacks.com/promo for an interesting offer. Also, make sure to subscribe to our YouTube video channel so that you do not miss anything. And I will see you next week.